Good morning, everybody. Thanks for joining. Welcome to Steering Clear of Chaos, the role of internal controls in risk management. We really appreciate you being here and taking time to learn a little bit, hopefully. We've got a lot of great content for you, but before we get started, there are a few housekeeping items, namely CPE. So in order for you to get continuing professional education credits for this, you'll need to log into the Conferences.io app. You can pull out your phone and take a picture of that QR code. It will take you to the app. I think you need to do this to get your 1 hour of CPE that we're offering for this session. So I'll give a second for you to get your phone out and take the picture and get to the right place. When you get there, it's going to ask you for a code. And the code word is 910. So take a picture of the code, get to that, the main page of the app. I think in the upper right-hand corner, it says code word. Click on that, type in the code word 910, which if you're an auditor like me, you realize 910 is not a word, it's a number. But that's okay. All right, we're gonna get started. We'll see this screen or a screen like this later in the presentation. There will also be a few questions for you as we go through. These are all requirements for CPE, so pay attention as we go along and answer the questions. Questions will be, I believe, on the screen, your computer screen, not the phone screen. So the phone screen is for the code word and the computer screen is for the questions. Let's get rolling. My name is Steve Randall, and joining me this morning is Carrie Urbanski. I'm a partner with Sikich, and with Carrie and our team, we lead the governance, risk, and compliance practice for the firm. I live in Chicago, and you can see Chicago behind me, and I've been with the firm for almost 9 months. It's not very long, right? But before joining the firm, I was a managing partner of a company called Vanya Global. We're a consulting firm specialized in internal control consulting and assisting companies with risk management, compliance, and internal audit. I founded Vanya Global in 2007, and we were acquired by Sikich on January 1st of this year. So that explains the 9 months. It's been great because now we're able to assist a broader spectrum of organizations, and always happy to have conversations with people about the services we provide and things we do. I've been doing this for a very long time and look forward to our conversation this morning. Carrie?
Sure. So good morning. It's great to be here. My name is Carrie Urbanski. I am a director within the Sikich GRC internal audit practice. I was born and raised and still reside in Chicago. I started my career many years ago at Deloitte. For the past 20 years, I have focused on SOX, internal controls, risk management, and internal audit. I was previously internal audit director for a few different companies, 2 of which were publicly traded.
Thanks, Carrie. And when she says socks, she means Sarbanes-Oxley, not that she's been darning socks. So about Sikich real quick. Sikich is a national accounting technology advisory firm. The slide, a lot of great content on this slide. The slide says we're like 1,600 plus employees, but I think we're actually closer to 1,800 now with some of the recent acquisitions, including my company. We're well over 100 partners and serve clients in all 50 states. We are probably tracking to maybe 2,000 employees by the end of the year, which includes a significant build out in India. This is a legal disclaimer our attorneys want us to include. It essentially says, if you make any decisions based on what I'm about to say without consulting me and something goes wrong, you can't blame me. On the flip side, I am hopeful that there are quite a few things you can take away from this presentation and immediately apply to your company to add value. Information is constantly flowing in and out of your company, am I right? And you and your employees and colleagues are handling and processing that information on a continual basis. Also, money is constantly flowing in and out of your company. And similarly, you and your colleagues are processing and accounting for those funds on a regular basis. So the question I have for you and what I want you to consider this morning, what is your company doing to protect and secure the flow of information and the flow of funds? It's a rhetorical question for now, so don't raise your hands and put the answers in the chat box. But it is a question I believe you should be thinking about. I'd like you to especially think about it this morning during the presentation. Maybe later today as you're eating lunch. Maybe even tonight if you're binge watching your favorite show. I want you thinking about it a little bit. I don't want to keep you up at night, and I definitely don't want it consuming your every thought. But I take it you're here for a reason. So if you spend some time considering some corporate defense mechanisms or corporate governance, you'll create a strategic shield that allow you to focus your attention on other more important matters. This morning, we're going to tell you stories about mitigating risk and avoiding chaos. And since we're going to be telling stories, we might as well make the stories interesting and suspenseful. So Carrie and I will try to weave a little suspense in our stories. And in doing so, we're specifically going to discuss 5 primary topics, the topics you see here on the screen. Why you and everyone else in your company is essential to the governance process. How risk management is important for every size company. We're going to talk about common internal control deficiencies and strategies to mitigate that risk. And then lastly, we're going to talk about ongoing management and monitoring of your internal controls. Like I said at the start, we have some polling questions scattered throughout the presentation, which are a requirement for you to get your CPE credit for attending. So let's start with question number 1. For that, I'll pass it over to Carrie. Carrie?
Okay. So if you have policies and procedures, when was the last time they were updated? The choices are within the last year, within the last 3 years, within the last 5 years, a long time ago, or never. We don't have documented policies and procedures.
And to avoid a bunch of dead air time, we'll give you 30 seconds or so to complete this. Policies and procedures, in my opinion, are one of the foundational pieces of good corporate governance and risk management. They need to be well constructed to reflect the expectation you have of your employees and the detail the requirements of the job. Policy and procedures aren't a one and done exercise. And as your business changes, here we go. As your business changes, so should your policies and procedures. And also you want to review them on a regular basis to make sure they adequately describe the expected behavior of your company. And looking at this, nearly, well, 43% of you have updated them within the last year. Congratulations.
I'm impressed.
Me too. Within the last 3 years is also very good. 5 years, okay, never updated. You may want to either take a look at them or create them, and we'll talk later about the reasons why. All right, let me move forward on to topic number 1, why you are essential to the governance process. I'm going to spend some time on this slide, so bear with me. Leadership of your company sets the tone to promote and foster an ethical and responsible culture. This is called tone at the top. I'm sure most of you have heard of tone at the top. Leadership not only has to set the tone by what they say, they have to reinforce the tone by what they do. And I want to talk a little bit about each role. And some of what I may say may be self-evident, but I want to create a baseline for the conversation today. So let's start with that first bullet point, the board. They're fundamental in promoting good corporate governance, and I've got 4 reasons. Number 1, they provide independent and objective judgment, ensuring leadership acts in the best interest of the organization, its mission, and its stakeholders. Number 2, they have a collective wisdom to help shape strategy, ensure it aligns with the organization's mission, vision, and values. Number 3, the board should assess and monitor financial, operational, legal, and reputational risk to safeguard the organization's interests. And lastly, the board sets or helps set and enforces ethical standards for the company. Well, that's your board. Now about the CEO. The CEO is responsible for setting the overall direction and strategy of the company. And obviously, they're accountable for your company's performance. They should be working closely with the board to establish ethical guidelines, risk management frameworks, and compliance procedures. And the CEO also serves as a face of your company, representing its values and vision to external stakeholders. I'm going to share some news headlines later where this becomes a challenge sometimes. The CFO So now we're on that second bullet point. The CFO plays a crucial role in identifying and managing financial risk, which means they're responsible for establishing robust financial controls and systems to safeguard assets and mitigate the risk of financial mismanagement or fraud. The CFO ensures compliance with financial regulations and reporting responsibilities. And the CFO develops the financial strategy and provides financial insights that guide the strategic decision-making. And lastly, the CFO should be promoting ethical behavior. And then lastly, the employees. Everybody in the organization plays a crucial role in the effective corporate governance in several important ways. Number one, they should be adhering to high ethical standards. They should be complying with internal policies and procedures and external regulations. They have a responsibility for and hopefully access to channels for reporting misconduct or unethical behavior. They should avoid situations that pose a conflict of interest. They do have a significant role in shaping the corporate culture and ethical tone of the company because they influence customer and stakeholder relationships through their professionalism, responsiveness, and commitment to customer service. All this to say, the actions and behavior of everyone collectively influences the corporate governance practices and your company's ability to build trust with stakeholders. So governance is everybody's responsibility, not just leadership, like we just said. Here are the things we need to make sure we're doing. We need to ensure socially responsible and ethical behavior. We need to implement appropriate systems and procedures to help mitigate risk. We need to ensure the integrity of internal controls, technology and information systems, and financial reporting. We need to ensure there's disclosure controls and procedures are compliant with all relevant laws and regulations. Ensure the compliance with applicable legal and regulatory requirements, and ensure the principal business risks are identified and managed. A breakdown in any one of these things could spell doom for your company. So let's take care of our governance responsibilities so that when your company makes the news, it's because of the good deeds you do and the mission you serve and the value you create. But if it were only that easy, because sometimes it's hard. You can have the greatest ideas, the biggest ambitions, but if you don't have the resources, it's nearly impossible to execute. And if you're like most companies I've worked for or worked with, resources are not unlimited. You likely can't allocate the adequate funds to instantly make your vision a reality. You're also likely relying on dated technology, even if you're moving to the cloud like a lot of organizations are. You're probably still accumulating some technology debt, which results in over manual processes. And as far as internal controls go, you're probably great at rallying around a problem. But too many times the problem could have been or should have been avoided if someone would have just done the right thing at the right time. You know, we're not in the firefighting business, unless of course you actually are in the firefighting business, but putting out little fires everywhere or one big fire distracts you from your mission, and conducting triage and operations is time-consuming, wasting valuable resources that could be used to support your strategic objectives. I'm sure many of you find yourself from time to time fighting these little fires. And even with these challenges, and maybe because of them, your role in governance is critical. Because if you don't, the results could be horrendous. You can't afford a 6 or 7 figure wire fraud. I'm going to discuss this later if we have time. Wire fraud schemes are happening nearly every day. I was on a conversation yesterday about another one. You can't afford a security breach. Villains are attacking 24/7, and it isn't a matter of if you're targeted, it's a matter of when. And you better have good backup and recovery capabilities because you can't afford to be held hostage by ransomware. And if you're storing confidential data, you can't afford a leak of PII. You can't afford a shutdown because of a disaster, accident, or act of God, or as we saw, COVID, or something like COVID. You can't afford the loss of resources or funds due to mistakes, theft, or fraud. And you can't afford accounting errors to impact your funding, financial reporting accuracy, or regulatory responsibilities. But what we've seen is no matter how well-intentioned you are, villains strike every day. They're dressed in normal clothes doing normal things until they're not. What is showing on the screen are recent examples I pulled from Google. These are impacted companies of all shapes and sizes in all industries. Some might look similar to yours. Unfortunately, these are not the only examples. This slide could have gone on for a very long time, but for the sake of time, I limited the list. As you can see, some of these listed are cyber attacks and data breaches. Did you know that numerous studies indicate that human error is behind most data breaches? It's true. A malicious actor may be the instigator, but it's human error that opens the door. And it's not limited to just cyber attacks. Chaos can happen at any time, anywhere. Most of the problems we observe are not perpetrated by someone acting maliciously. On the contrary, it's a good employee, a loyal employee, a faithful employee, someone who's trying to do the right thing for the company, but they simply make a mistake. Sometimes it's a minor mistake, sometimes it's a terrible mistake, but still it's just a mistake. Everyone makes them, and the busier we get, the more stress we are under, the more likely we are to make them. We need to have mechanisms in place to stop these errors. Carrie's going to take over from here to share how we can avoid the chaos. But just before she does, there's that slide again. If you missed it the first time around, here's your second chance. The QR code is there. Enter the code word, which is not a word, of 856. And we'll give you a second to knock that one out. All right. Carrie?
Okay, thank you. So we have already discussed your roles, but your roles are especially important for governance and enterprise risk management strategies. We believe it really starts with you, the leaders and board members of the organization. You are visible to employees, and employees follow your lead when deciding what is acceptable behavior. You are the ones who set the tone at the top. You define what is acceptable behavior. You have the authority to hold other people accountable. You are responsible for the performance of the organization, whether it be financially, morally, or ethically. For governance and risk management strategies to work, you must be part of that. Then I think we have our polling question next. So if you want to switch the slide.
I'm trying.
Okay.
There we go.
Sure. Oh, okay. So our next polling question. So how do you describe the maturity of your risk management program? Would you describe it as optimized, effective, developing with room for improvement, in the initial stages, or none? And we'll give you, again, 30 seconds or so to answer the polling question.
I like how you started at the bottom and went to the top.
Well, I'm just looking at that it does, it's opposite in the notes, so sorry about that.
No, it's good.
Starting with the most positive. Developing.
Good.
That's good.
So
Yeah,
it shows me that everybody's pretty self-aware. That's awesome. After the next, what do we got? 40 minutes left. Hopefully those with none or initial stages get started, and those with room for improvement have taken back a few nuggets of information that helps them with that improvement.
Definitely. Okay,
back to you.
Thank you. So as we go through this, the questions to be asking yourselves or having in the back of your mind are, what are your risk management strategies? Are they enough to identify and mitigate risks? And are those strategies defined and designed and operating effectively? If it is solely based on the fact that you designed and developed them and perhaps you put them on a shelf or you trust the individuals performing them, there are many stories where the trust has broken down or even failed. You may want to consider testing those strategies to ensure they are appropriate and operating as you intended. If you don't have any form of risk management strategies, what can happen? Well, quite frankly, fraud, as we just saw in a previous slide. Steve showed the slide of various different headlines of real life frauds that have taken place over the past several years. Fraud happens at both large and small organizations, whether they're private, public, nonprofit, it does not discriminate. If you do have formal risk management strategies, that's great. You're effectively improving your chances to identify risks coming up in your organization. And when you identify those risks, you can effectively mitigate them. Most organizations employ the 3 lines of defense model, which we're going to do a little spin on it today and call it the 4 lines of defense. But the theme, as we are discussing today, executive management and the board play an integral role in this process. So all organizations, no matter the size, industry, private, nonprofit, have risk management strategies. Some are informal and some are more developed than others. So looking at the 3 lines of defense model, it helps identify structures and processes that best support the achievement of an organization's objectives. It facilitates strong governance and risk management. All the roles are working together collectively to contribute to the creation and protection of value when aligned with each other and the prioritized interests of stakeholders. Depending on the size, complexity, and staffing of your organization, you may have stronger first lines of defense and less so on the second and third lines. Or perhaps in smaller organizations, the first and second lines are performed by people wearing multiple hats with multiple responsibilities, and there is very little difference between the first and second lines. We'll go through these in more detail in the coming slides. So it is called the 3 lines of defense model, but the board and leadership of the organization, as we discussed and we'll discuss more today, are critical. If it's not important to those individuals, then it's most likely not going to happen. It won't get done. If risk management is important to those people, it will get prioritized, and I've seen this many times. In essence, the board and executive leadership team are the overarching line of defense and quite important to this process. So the first line of defense is your employees and what they're doing as their day-to-day jobs. Hopefully, they're following established and documented policies and procedures, or at a minimum, they're following procedures they have been taught on the job related to what they need to accomplish. The first line of defense is where you will see most of the risks identified and captured related to the business. As employees see things, working through their day-to-day activities, potential issues, they talk through those items with their supervisors, and they're able to identify and hopefully mitigate risks. Of course, it's not enough to just throw somebody on a job and say, go ahead and do it. We've mentioned policies and procedures, and you'll hear that theme a lot today. If you have policies and procedures, whether defined or informal, preferably defined, these help guide employees in their job and how they're supposed to perform tasks. It also aligns what they're doing with prescribed, approved procedures that are in line with the organization's goals and objectives. Included within those policies and procedures or elsewhere in the organization may be internal controls. Those internal controls, when you design and define them, to also protect the organization. If there are weaknesses or cracks in the first line of defense, it becomes harder to catch. So there's an increased risk of fraud and risks you're not aware of coming up to fruition and causing a bigger issue than it needs to be.
So one thing I wanted to circle back, Carrie, with you on this slide is what's relative to the first line. I have conversations nearly every day where the term institutional knowledge comes up. Institutional knowledge is when an individual has all the knowledge needed to execute their role, and it's not really documented in policies or procedures, and we're relying on that individual with institutional knowledge to carry out their job performance and mitigate risk. But what happens when that person leaves? If it's a smooth, easy transition, that's awesome because they can train their replacement. If it's a promotion, obviously they're still within the organization. If it's a lateral move, they're still within the organization. But what about when they leave? What about if they leave on not so great terms? You risk that institutional knowledge going away. That's why it's best to take some time and document what they're doing and creating a set of policies and procedures that are easy to understand, easy to follow, but at least immortalize what that role, expectation of that role is.
For sure, and I'm glad to see, going back to the polling question, that so many companies have been updating, because many times I've seen it's really what falls down the list. It's we'll get to that next year, and then a bigger project, more pressing, comes up, and it just gets kicked down the road. And so, again.
Yeah, and one of the things we said at the start is that they need to be updated, because as business change, procedures change, and you should update your policies and procedures to impact it. And I don't know a single business over the last 4 years now that hasn't gone through significant transformation. So
Right. Definitely.
All right, on to next. Oh, this is you.
Yep. So we're starting to talk about internal controls, so we thought it would be good to define them. The Institute of Internal Auditors is the governing body for the internal audit profession, our profession. They're kind of like the AICPA is to accountants, but exclusively dedicated to the internal audit profession. The IIA sets the standards all internal auditors should conform to. The IIA's definition of internal controls is they are policies and procedures implemented by an organization to ensure their financial reports are reliable, operations are efficient, and activities are compliant with applicable laws and regulations. Internal controls are essential to good governance. They should be documented in procedures, understood by employees, and reviewed by management and the board. And they should be tested to ensure they are effective. So not just documenting them, but also testing.
Yeah, when I explain to someone what I do, and I say that I'm an internal audit, and first thing they think of is IRS, and I'm like, no. And then they think of public accounting, I'm like, no, and it's hard to understand. So this essentially gives you a really good understanding of what internal audit does. Internal audit is really just testing the effectiveness of the internal control mechanisms you have in place, and this slide helps define what internal controls are.
Okay, so moving on to the second line of defense, as discussed earlier, could be the same individuals as the first line of defense. This might be the case for lean organizations. For other organizations, there might be separate functions or groups. Whether you have a full-blown ERM group or you just regularly sit with your teams to discuss risks and how to mitigate them, it really doesn't matter. It's form over function. The important thing is that it's being done. Sitting around a table discussing what risks you should be considering in the coming year and how you should address them is a mitigation strategy that can be applied for smaller organizations. It might be what makes most sense for them. For some risks, when talking about the second line of defense, it could be an outsourced risk mitigation strategy. For instance, you might have outside counsel, or you could also have an insurance broker for any insurable risks. Identifying, understanding, and then applying a mitigation strategy are the important things. If you're not in the process of identifying risks, you won't be able to determine how to remediate issues or deficiencies that arise, or apply a risk mitigation strategy to them. Similar to the first line of defense, if risks are not identified or there are weaknesses in the second line of defense, then the chances of those risks occurring or you being unprepared for unidentified risks increases.
So if you're, as you're listening to this, if you're sitting in a finance team of 2 or 3, and you look at it and say, yeah, I'm the person that, adds vendors and receives invoices and compares them to orders and approves them for payment and sends the ACH payment. And I'm also doing the review of the work I do. You're like, oh, I am the first and second line, which we certainly understand is happening out there, not because of being best practice, but it's a necessity. You don't have the resources on the team or on the staff to adequately segregate all those responsibilities.
Sure. Okay, so moving on to the third line of defense. So for most private and smaller organizations, this is truly the most neglected line of defense, and I've seen this a number of times. It is independent assurance, whether you have an internal audit function or not. The third line of defense establishes accountability. When we do internal audits, or we are the internal audit function for organizations, we conduct risk assessments. We look at the design of internal controls and test the operating effectiveness of those controls. We don't just rely on the fact that controls may have been done and that control owners are performing them. Of course, we trust, but we verify. Unfortunately, most smaller organizations do not have a third line of defense, but we believe they can benefit equally, if not more, than some of the larger organizations just by doing periodic general internal controls reviews. We have done these for several organizations. We come in, review controls over a wide range of processes, and give our assessment related to the internal controls design and whether they're operating as they were intended. This gives some assurance to the board and the leadership team, and again, establishes accountability. It really is important that individuals know someone is going to look to ensure that things are done appropriately. If you don't have a third line of defense, how do you really know what you designed is actually appropriate? And if there were changes in people, processes, technology, what happens to the design? Sometimes, if not documented in policies and procedures, that design can morph into something else, and it's no longer what you intended or what you created. Lastly, how do you know that it's actually operating as you intended? Unless your oversight procedures are looking at the controls, I don't think you really, or we don't think that you really know. Again, there's potential risk that controls may not be working, and if nobody is looking, you may not know until it's too late.
So Carrie, I'm going to throw in something from left field, something that we didn't rehearse.
Okay.
How do you respond to the person that says, well, my external auditors or my public accounting firm is looking at this, aren't they?
No, they're not. No, they're looking at the financial statements. That is a misunderstanding often, that people might be thinking that, oh, the external auditors are looking at that. No, they're auditing to make sure that your financial statements are not materially misstated. Sometimes, I mean, if it's not a public company, if it's private, they're not looking at internal controls at all. So there can be all this going on in the background, and it could be something chaotic looming or boiling, and they wouldn't know. The external auditors are not looking at this at all.
Mm-hmm. So relative to the services that Sikich provides, we are, our auditors, our external auditors are doing light touches on internal controls, really just to validate that your financial statements are accurate, that you have procedures in place that produce accurate financial statements, but it's really not a deep dive into the effectiveness of internal controls and if you're actually mitigating the most significant risks to your business. So, you know, that I hear a lot of times, you know, something goes wrong. Where were the auditors? Well, the auditors were there. It's not part of their engagement to do deep dives into every single internal control you have and look at every risk management strategy. So that's where this third line of defense comes in, doing an independent review. And again, most of you probably don't have an internal audit department, which is totally fine. It could be the CEO, you know, spending one couple of hours each month or each quarter just reviewing. That would be an independent review. Maybe it's a board member. If you're not for profit, maybe someone sits on your board that volunteers their time. So, and before I move on, anything else to add, Carrie?
No, I think that's it.
Okay.
Okay, so moving on to our next polling question. How confident are you in your internal control environment? Extremely confident, I sleep well at night. Confident, but sometimes I have restless sleep. Moderately concerned, I sleep with one eye open. Extremely concerned, sleep? What's sleep? Or no opinion. I don't see that one on the screen, the fifth one.
It's not on the screen. So we're not giving them no opinion.
We're not giving the option.
So last night I may have slept with one eye open, gripping my pillow tight. So we'll give you a second. Here comes the results. Extremely confident, I sleep well at night. I am absolutely thrilled for the 8% of you. I think the rest of you, maybe we have a separate session where it's just a panel discussion with the 8% sharing what they're doing with the rest of us.
Seriously.
And you know, we don't want you in the third or fourth category. We want you to sleep and sleep easy. So, you know, I know you're super busy, but when we get out of this, start thinking about it and take a dive into your policies and procedures and make sure that you've adequately identified and addressed the major risk for your company. How are we doing on time? We got plenty of time.
So we need more jokes too.
Oh yeah, exactly what everybody wants to hear is my lame dad jokes. So as we discussed at the very beginning, Carrie and I are sitting in Illinois. I'm in our Chicago office. That's not a virtual background, that's the real background. Unfortunately, it's not a bright, sunny day yet. But I live downtown. I live in Old Town, which is a neighborhood just north of the Loop. It's down the street from DePaul University. Maybe you've heard of it. I'm assuming most of you have. One of the accounting professors at DePaul University is named Kelly Richmond Pope. I've had the pleasure of meeting Kelly a couple of times. She's kind of a superhero to me. And I'm going to explain why. She produced a documentary called All the Queen's Horses. And I'm suggesting that you look it up if you've not heard of it. Again, it's called All the Queen's Horses. It's the story of a small town in Illinois, Dixon, which also happens to be Ronald Reagan's birthplace. Dixon was the victim of the largest municipal fraud in the US history. The villain, or person who perpetrated the fraud, was a long-standing and trusted employee. Very long-standing, very trusted. The hero or whistleblower, in this case, was a soft-spoken, loyal employee who simply asked one question. The documentary is, I think, 54 minutes, so it's not a long one, and it's quite a story. Again, I suggest you look it up. It's called All the Queen's Horses. For those who are interested, Kelly Richmond Pope has spoken at a number of conferences that I've attended, and again, I've had the pleasure of meeting her. She won the Educator of the Year award for the Institute of Internal Auditors. It was it's an award that the group named after Dr. Sandra Shelton, who had an passed away untimely a couple of years ago. We named it after her, and Kelly was the first winner. Dr. Shelton was also a DePaul professor. So anyway, not that any of that necessarily matters to the story, but All the Queen's Horses, look it up, because it just emphasizes why internal controls are needed. Like, I trust your employees too, and I don't want them to think you're looking over their shoulder, but like you said, mistakes can happen, especially as the busier we get.
Just a couple. So I watched it as well. I think it's on Amazon Prime, but it is a really, it's quite interesting, and I don't want to give away, but yeah, in a small town, what could happen, and it's very interesting. Highly recommended. Love Kelly. She has a book out as well.
Yeah, she has got a book, and it's on my nightstand, actually. It's really embarrassing to admit that. But just because it happened in a small town, it can happen anywhere. I mean, the same exact thing can happen to any company of any size.
But a longstanding trusted, sorry to cut you off, a longstanding trusted employee that really just took advantage of the lack of internal controls.
If you're at a bank and you're at an executive level, you're required to take vacation. And the higher you get, the more consecutive days you have to take off. And someone I was talking to probably 2-3 weeks ago was kind of complaining about how they have to take the days off. I'm like, well, have you seen All the Queen's Horses? That's why. So let's go into some common deficiencies. Some of the stories that we've seen and heard and advised our clients through.
Sure. So one of the best ways to protect yourself is also one of the most common deficiencies that we see. It's segregation of duties. One single person should not have complete access without another person being involved. And it's very important whether an organization is publicly traded or one that is small and light staffed. And it might actually even be more important in smaller organizations. Organizations should work diligently in trying to make sure that they separate duties and commensurate with those duties, provide the appropriate system access. We realize and recognize that segregation of duties can be difficult to achieve in smaller organizations. It's important to be creative on how to achieve this. Again, it's one of the most common deficiencies that we see. It's difficult to remediate, but there are ways to do it, being creative, and sometimes you have to put in detection controls, but always an interesting conversation around SOD items.
It is,
Account
and
recs.
it's the way, it's not necessarily maliciously, but mistakes get made. And if you're that person I was talking about earlier, 3-person finance and accounting staff, you're doing sometimes everything and you have access to everything. I'm not accusing you of being malicious with malicious intent at all, but someone else, if we can't separate your responsibilities, put in adequate oversight and review, someone should be doing a review. Again, whether it's a peer, a supervisor, someone should be doing a review. Carrie, go ahead, I'm sorry.
And again, it might not even be, like you say, malicious. It could be, it's checks and balances of mistakes, truly, but just want to add that. So account recs, one of the basics. Another common deficiency is account reconciliations. Most organizations hopefully are performing reconciliations in a timely manner and investigating age transactions, large or unusual transactions, or any differences, and performing an independent review. That's also key. Account recs are controls to monitor and hopefully catch items that may be indicative of breakdowns in your processes. I've seen this numerous times, and I've seen that sometimes, oh, we haven't done the bank rec in 6-9 months. Oh, yeah, and we'll get into that with cash, but just it's a back to basics really control that I hope everyone's doing. Cash, similarly for cash purposes, you want to segregate duties. You want to make sure that you're annually reviewing the bank authorities. I've seen situations where previous employees who have long since left an organization still have banking authority. You want tight controls over cash, and that it's not within one individual's purview is critical. Again, the person who has left the organization has the banking authority. Maybe they can't do anything, but maybe they can. So it's just a housekeeping cleanup, especially as it relates to cash. And then vendor setup and payments. This is another area that we see deficiencies in.
Yeah, so my notes here in front of me says, I've heard 8 stories of the past couple of weeks, actually make it 9, because I just heard another one yesterday, of companies that have been victimized by a payment fraud scheme. In multiple cases, I think it's in fact all cases, it was the vendor that was hacked, and the hacker disguised themselves as the vendor. And as I'm speaking, I'm sure some of you are nodding because it may have happened to you. The hacked, the fake vendor sent a new invoice or a confiscated invoice where they've changed the information, and some of the things they changed were banking information for payments. In some of these stories and some of these cases, verification procedures were not existent. In others, verification procedures were in place. They just weren't followed or followed closely enough. In a specific story, the perpetrator and the victim communicated only through email. If a vendor changes their payment instructions and you're only communicating with them through email, that is a red flag. The victim actually requested the perpetrator to send a bank letter confirming the account, and it happened to be an international bank. The perpetrator sent the bank letter. Upon review by me, it was quite obviously fake, but it checked the box of, oh, we got the bank letter. That request shouldn't have gone to the customer, the perpetrator of the fraud. It should have gone directly to the bank. Like I said, the bank letter was fraudulent. The victim accepted it without as much professional scrutiny as I would have preferred. And they ended up paying a sizable 6-figure payment, a sizable 6-figure mistake. So this specific case, they had procedures. It said, verify, any changes to bank account information. And you can verify it by either calling and confirming or requesting a bank letter. And there may have been a third or as well. They communicated only through email. The person should have picked up the phone and called the vendor directly from the phone number in your vendor master file. If they're getting a bank letter, they should have gone directly to the bank. So again, this is happening all the time. It's the hacker hacking, not you, but your vendor, and submitting the fake invoice. So it's critical that you have some review procedures set up in those instances. If you don't, and hasn't happened to you, now's your chance to go in and explore and make sure you have adequate procedures.
For sure. And I've seen where the email, like you mentioned, that the vendor getting hacked, their email was hacked, and it was like you see the email chain, and all of a sudden the conversation takes a turn to update this banking information, and yeah, ask the question.
It can be really aggressive, your payment is now late, or we need the payment because we got to pay our bills. You've been a loyal vendor, you need to pay us now, and they put a lot of pressure. So anyway, That's just one of the many things we see, but that's relative to the payment.
Yep. Okay, so and then expense reporting processes. I think most organizations have seen something related to this. People get creative. We've seen people purchase a China set and put it through as a meal expense because it was written in Japanese and didn't think that somebody would be able to read the language. So again, people get creative, so you need to be watching out and mindful.
Well, I mean, it's sometimes it's really stupid stuff too. You go out to dinner with 3 people, so there's 4 of you, and you order a 5th meal and take it home. Or not you, but someone. So small stuff, but it adds up. So
yep, for sure.
Carry on.
So payroll, making sure there are controls around new hires and changes to payroll. We saw a very large retail pharmacy store that caught its managers delaying the termination date for its employees and their system so that they could take the last paycheck and cash it at a currency exchange, grocery store, and a variety of different methods to cash the checks. So quite crafty.
And let me interject because if you're a smaller company and you've got 10 to 20 people on payroll, it's less likely you're making a mistake, but mistakes do happen. So a regular review of payroll by a independent person within your company is good. A larger organization decided that they wanted to do some payroll testing. They're a fairly large multinational company, and so they decided that the best test they could do was to pull payroll data and look for different employees with the same bank information, because they thought maybe they had fake employees and the money was getting sent to a real employee. What they found out when they did that, they got a tremendous amount of hits on that, and they got all excited for the wrong reason. They're excited because they're going to be able to punish these people. Well, it turned out they have a lot of married couples working for them, so that was not the best test to do to test payroll. But payroll is an area that again you should be testing. Go ahead, Carrie. I'm sorry.
Okay, no. So policies and procedures. We've talked about general policies and procedures. We didn't talk at a higher level the importance of a conflict of interest policy and a whistleblower policy, as well as a whistleblower program. In fact, the Sikich team, our team, recently worked on an investigation from a report that came through a whistleblower program. The allegation was that the company recognized revenue early and deferred expenses, and the organization hired Sikich to evaluate this and make a determination as to whether or not this was actually occurring. But implementing controls and policies and procedures and making sure you have a third line of defense are important to help capture these things. Information technology is, as far as the final item here, most of what we talked about is on the finance side of the house today, but there are a lot of controls and issues that come up in IT. We've talked about cybersecurity, but in small IT departments, you can have a lot of responsibilities within a few individuals, or some of those individuals may have what's called the privileged user access, essentially giving them the keys to the kingdom. They can make any change within the system for any data without anyone being able to see it. One of our clients was a very fast-growing technology company, and in their efforts to make sure they were addressing questions from the business in a timely manner, they gave several of their IT individuals privileged user access. No issues were identified, but the ability and the opportunity was there to be able to do anything. And I've seen situations too where in my past where a new ERP system was being implemented and it was getting too difficult. It was before the company was bought out and made public. And it was too difficult, so they gave everyone admin access. And it's like, oh, now in a Sarbanes-Oxley environment, in that situation, it was, potentially a material weakness. So
Yeah.
definitely something to keep in mind.
Well, how about this one? I did a review for a secondary school. There's 5 people in total in their accounting function, the CFO, a controller, and 3 accountants. Controller goes on vacation, which the controller should go on vacation. And when the controller's on vacation, in his absence, he granted his access to a staff person. The access includes setting up vendors, approving invoices, submitting payments for approval. So all the things you would expect. The controller returns from vacation, but as the controller is getting busy catching up, the controller forgets to go in and revoke the privilege access. And our review was, I think, 18 months after this vacation. So the accounting staff person had all that access for all that time, just because the person got a little too busy to think about revoking that access. We have other situations where a small sales office had an administrative assistant that needed access to certain things to do their job. The IT department grants access based on user profiles, not on the individual. And so to give this person the access they needed, they granted multiple profiles, which gave the person same access as the accounting staff, the ability to create a vendor, approve an invoice, and submit for payment. So that one small sales office with one small administrative person could have actually brought down the company. Let's end these common deficiencies with a good story. We just wrapped up an investigation. The investigation, there was an anonymous allegation made against one of my clients for intentionally recognizing revenue improperly. It's a serious allegation regardless of your organization type or organization size. We executed some agreed upon procedures, which included walking through the revenue recognition process. We tested the controls and reperformed some of the calculation. Turns out the allegation was false. They did everything appropriately, and they had really good system of internal control. So it was a disgruntled former employee that was throwing smoke back at the company, and it fortunately it proved to be false because they could validate and verify, or we could validate and verify their system of internal controls.
Good.
All right, we are another code word. 446. We should change this to code number, or actually spell it out, FOUR-SIX. And I was gonna, at this point, I was gonna repeat what the code words were previously. The first one I think was 910. I don't remember the second one. And this one was 446, just in case you weren't able to capture the code the first time. All right, let's bring this one home, Carrie.
Okay, so what can you do? The theme of the day has been starting with yourself. Set the tone at the top, build or update your lines of defense, create policies and procedures if you don't have any, or update the ones you have. Perform risk assessments, preferably annually, to be able to identify the risks that your organization faces. If you are unsure how to perform risk assessments, enlist the help of others like Sikich. Finally, don't forget about the third line of defense. Periodic independent assurance will help ensure the controls are designed appropriately and accurately.
Should I tell my hero story?
Sure.
So, if Superman or Batman were real, I submit to you that there would be no crime in Metropolis and Gotham City. Penguin and the other villains, the Riddler or whatever they were, wouldn't be willing to commit crime if the Cape Crusaders weren't roaming the streets or the Man of Steel were patrolling overhead. They'd be crazy to. But if there were no crimes in Metropolis or Gotham City, would Superman and Batman be any less of a hero? Are they heroes only because they catch crime, or could they also be heroes because just by their presence, crime is prevented? Crime doesn't happen. In your governance structure, your tone at the top, your risk management, your compliance function if you have one, and your system of internal controls are the Superman and Batman in your story. The more effective they are, the less you'll notice them. And if you don't notice them at all, the bigger hero your internal controls and your risk management becomes, in my opinion. All right, so on this slide, I forgot to mention when we went through the introductions originally, the QR codes on this slide and our original slides link to our LinkedIn profiles. We're happy to connect with anybody if you want to get in touch with us directly. Our emails are also on this page as well if you want to get in touch with us via email. So please, contact us in either manner. And looking to see if there was any questions posted. So yeah, we appreciate you joining us this morning. I hope it was a little bit informative and maybe a little bit entertaining. I tried to refrain from the dad jokes that I normally tell. So Carrie, any parting words? I don't see questions. So
I don't either. No, this has been great. It's been fun. Hopefully there's been some key takeaways that you can bring back to your organizations. And again, if there's any questions that do come up later, shoot us an email or reach out to us on LinkedIn.
Awesome. And the last slide is just simply thank you. So thank you, everybody. Maris, go ahead and take it away.